Today in the grain market, soybeans were lower. Futures again started higher, then the market fizzled. It's really kind of a surprise that the market's been under this kind of pressure with being so high really all summer. Although I suppose it shouldn't be a surprise since it is a harvest time right now. You know, that 12-cent decline today just is showing that the soybeans have been under pressure for quite a while. And even though the soybean oil contract has been very strong. It's just not enough to carry the soybeans as well. Now we have been remaining in the channel that we've been in for the last week, but we're really testing the lows. Also, wet weather is delaying some of the harvest. We would have thought that that might have offered a little support. That's not really happening. China demand has been kind of slow to materialize, so we haven't really been getting any support from there. And one thing to take a look at after tomorrow's report, once we see our numbers, what's been happening lately is that the market gets digested within a day or two, and then we start going back to the fundamentals of the market, and so or technicals of the market. And so right now we're seeing that the largest open interest in the November strike is the $12 strike, which is lower than we are today. So that's something to just be watching going forward. Now today corn did firm up. It's still sideways ahead of tomorrow's report. We're just kind of waiting. Everyone's kind of wringing their hands, waiting to see what these numbers are so that we can really start to move the needle on where the futures are going. That wet weather is really going to be, kind of stalling out some of the corn harvest. Now, one thing to note, though, is the money managers have been buying corn and selling soybeans. Perhaps that's what's keeping corn afloat, and that's why soybeans have been under pressure. That's really the only thing that's kind of been happening right now. The C-vol for corn is like 25%. Actually, the C-vol for soybeans was 19.7%, pretty much the same that has been really for a week. So just something to kind of take a look at. The wheat has been steady as well. Futures did make a new 6-day low. I think the wet weather and things could possibly, help actually the wheat that's already in the ground for these contracts. And I guess we're having a little bit of backfilling for Chicago wheat and Kansas City, whereas Minneapolis wheat has been relatively strong, even though it's lower today, up at that 950 mark. It's important also to note that in the open interest and options on the December contract, the 780s and $8 really carry the most open interest, as opposed to like in corn and in soybeans. I mean, corn, the $5 open interest is at 59,000. That's carrying the most. So what the report tomorrow is really going to give us an idea on where we are with all the stocks that we have. That being said, after all that is done, we're absolutely going to be focused on demand going forward, certainly into the fourth quarter. So this report really is carrying a lot of weight for the market.